Hello and welcome to the CNBC Africa Special Report as we try to look into the East African markets. We've had so many conversations on unlocking the potential and of course the real value in these markets. The stock exchange today, we're speaking with the CEOs from some of East Africa's fastest moving economies. We're speaking to Moremi Marwa. He is the Chief Executive Officer of the Salaam Stock Exchange. Thank you so much for creating time to speak to us. In the middle, we also have the Chairman of the East African Market Securities Exchanges Association and CEO of Rwanda Stock Exchange, Mr. Pierre Célestin Rwanbukumba. Thank you for creating time. And finally, the CEO of the Uganda Securities Exchange, Paul Bwiso. And as they join us, we tend to look at how the markets have been performing. We haven't seen IPOs in a very long time until just recently when we saw the IPO in Uganda for Cipla, Quality Chemicals. We're going to look into all of this right here on CNBC Africa. My name is Mugisha. Remember, you can follow us on Twitter at CNBC Africa or my personal handle at Mugisha. Gentlemen, thank you so much for creating time to speak to us. Allow me to start with the chairman in the middle. I also understand you carry two hats because you're also doubling as the CEO of the stock exchange locally here in Rwanda. Célestin, give us a look into the regional performance, an outlook on how the markets have come so far.
Thank you, Michael. Where should I start? I think this year we've had, the past few years actually, I would say, we've had a good runs until mid-2015. It was up and down because of the larger issues across the globe with the commodity crunch and crisis across the continent and beyond, especially sub-Saharan Africa. But when it comes down to East Africa as a whole, the economies are performing quite well. We've had a growth about 5% at least for the past few years, and it is expected to continue. Some of the countries go beyond 7, 8 across Uganda. We are seeing currencies stabilizing a bit as we speak. They are not going down the way they were not depreciating the way they were depreciating before in the past since 2015. So we see some bit of stability along those lines. The larger economy is performing well. However, the markets are not necessarily keeping up. We've had indices going down this year. Even the equities markets are really down this year. The indices have gone down up to Q1, even up to actually right now as we speak, we're talking about Uganda going down, maybe the all-share index at around 9%. The Salaam is also down. Nairobi, same thing. Rwanda is a bit slightly above where it was in January, but it's around there. But the general trend is the reduction in transactions in general. You know, the volumes have really dwindled, especially on the equities markets. People now are more comfortable with, they are fleeing to safety. When, things are not, liquidity issues arise and you have markets volatile a bit, you have the people fleeing to safety, which is fixed income. So and that can be seen across the markets. So of course we've had a few years of dryness in the entire market, where you have a few IPOs coming up. We had Cipla last year. We had the secondary offering Bank of Kigali. We had Vodacom, I think, in Tanzania. But that's not enough. I mean, for 5 markets, and economy size of East Africa today is around GDP-wise around 207 billion. If you add Sudan and all these markets right now, if you talk about the GDPs, but for funding that economy, we are seeing a lot of projects in infrastructure and so on. But the markets we are not seeing activity in that line, except more issuance on the fixed income side, mainly dominated by government actual issuance, not even private per se. Few corporate action here and there. For some markets are doing commercial papers, and a few corporate bonds, but rare. They don't trade much either. So the activity we are seeing, really the stability, and we are seeing it in fixed income dominated by government.
Right. Célestin, very good point there, but you're talking about the movement from the bonds and, of course, investors fleeing to safety. Does this have a lot to do with the private equity, people preferring to go more into private equity than, stock markets? Paul?
I wouldn't say that would be the main issue. The structure of our markets is a little different from, say, the developed ones. Here we've got, take for example in Uganda, we've got a large pension fund, NSF Uganda, that dominates really the market in terms of activity. And once it participates in the market, it holds long term because its objective is really retirement for its pension members. So whereas private equity does play a role for the growth companies and SMEs in raising funding, on our end, we've not seen quality products, and that probably goes with our structure of regulations and requirements to bring companies to the market that should be able to attract and put this capital into these companies. And also the other challenges that potential investors out there or companies have in coming to market, being prepared and being willing to give a portion of their companies to the public.
Right. When you see less activity on the bourses, what does this reflect? Is it that there hasn't been enough awareness on the real value of the stock exchange, or is it what we've had in a lot of conversations, that the portfolio is not as diversified as investors seek for it to be?
I think it's a combination of both. I think on the financial literacy, we need to do something, creating awareness, but also educating the public about what we do as markets. The exchange have the role to do that, regulators have the role to do that, but also market intermediaries, brokers, investment advisors, and financial advisors in our markets, they have a role of engaging in more creation of awareness to different players, or could be players in the market. So whether it's policymakers or some government agencies, private sector enterprises, retail investors, institutional investors, all that ecosystem is not well informed as it should be. And as a result, like my colleagues have said, the contribution of our markets in different projects, in different enterprises, has not been to the extent that it should be. There's that deficit of awareness, but also the legal and regulatory framework in some of our markets needs something needs to be done around there in order to unlock more value that could go into the capital market intermediation and finance the really economic activities within our economies.
Right. Célestin, when we saw IPOs like the one of Vodacom and, of course, Cipla in Uganda, and the rights share, of course, here with Bank of Kigali in Rwanda, we expected to see a doubled activity on the bourse. And to some extent, yes. But how did these have an impact, or how significant were they to the results that we saw through 2017, 2018, or perhaps 2018 to where we are now?
Well, it's a tricky question because the new companies for Vodacom or Cipla, they were quite big, sizable IPOs. So was actually the Bank of Kigali rights issue. It was a big one for this market, even including Nairobi. So you must realize that many of these companies, these companies were already trading. So if you talk about Bank of Kigali, it was already trading. So there is really not that much. A lot of money has been sunk in the issue itself, not necessarily on the secondary market side of it. So it does not really have necessarily to add more activity of a company which is already existing. So going to Vodacom, I was also again a big issue. If people participated, they already participated, and these people are people who buy and hold mainly. So they're in it for the long haul. So it's not the company going in and out just like that. So it's not as simple. Same would go for CIPLA probably. Maybe my colleague can chip in more on CIPLA in Uganda, the mix of people who have invested in the company. So the activity of companies which are already there, again, many people in our markets so far, it's not retailers, it's institutional investors. So these people, once they go in, they hold. So you can't expect really that to have a quick impact like that, unless maybe it's a penny stock or something that is coming and people want to go in and out. And those days are over, really. You know, those days used to be there when people were not much aware about how markets operate. So people are getting to know, actually, even if we say there's not enough education, but education is sinking in those people who are participating in markets. So those who are going into the markets nowadays, they don't necessarily want to get out immediately. Not necessarily.
We're looking at the Vodacom one. How was that with the DAC?
Okay, so there was a Vodacom IPO last year, and that was the 10th IPO in a period of 5 years. But in terms of size, it carried the big chunk, almost 80% of the total of 10 IPOs that we have conducted in the DSC for the past 5 years. This was a 200 billion worth of an IPO. There was some lessons that came out of it. Initially, the spirit of telecoms in Tanzania to list into the stock market is in the spirit of creating more economic empowerment to local citizens. So that was the target. But then in the mix of it, it came to the realization that the local retail and institutional investors could not absorb the whole of the 200 million US dollar IPO by Vodacom. So we uplifted some restriction there to allow foreign investors to participate. That's when there was the full uptake of the IPO.
Right. Célestin, let me hear your thoughts on what you've seen around the region as well. Because as of recently, we had what's happening in Tanzania, President John Pombe Magufuli asking all telecommunication companies to list on the DAC. And I think we've seen the same happening with Uganda. If you remember the days of the World Economic Forum, where President Yoweri Museveni met with Rob Shuter, Group CEO of MTN Group, and asking them to flood the local bourses so that they could increase ownership, local ownership. What is your take on the government intervention at this point?
My take is very simple. You know, the local economy must also be owned at a certain extent by local domestic investors and the general public where need be. So it can come in different forms. Again, you can float it and then the Social Security comes, takes everything. Or some institutional investors, you don't have enough retail investors, but there are some also who come in. But again, remember, Social Security are also, we call them one account, but it's an account belonging to so many people because the money they have belongs to retail investors anyway. It's the savers, your money and my money that goes there. So, but still you having that local content. So when we talk about made in Rwanda, made in Tanzania, made what, why not invested in Tanzania or Rwanda? So that means saving in your economy, don't just become a taker. You know, we are the ones taking services for those international companies or these big telco utility companies. We are the customers in the banks, we are the customers in insurance companies. So are we, the ones who are making phone calls and using data for these big companies of utilities. So what is wrong by them taking away my money because I'm using a phone call, but also what is wrong by empowering me to gain in that making of that call as an investor? Because the moment you place your call, you use internet services through a telco, which is a public utility, you are given a license over other people who would want that license. And the license belongs to what we call wananchi. It belongs to the taxpayers in that particular country. So I think it's really only fair to give justice to the local people on the side of local content in terms of ownership. That increases, okay, economic inclusion. by way of participating also in the growth of those economies. Otherwise, we are participating by way of being customers to those institutions, but when they make money, most of the time actually the group levels take more money than what remains in the country. So what happens? So those are some of the discussions actually in supporting the idea of having local ownership. Of course, local ownership most of the time is better if you do it publicly, not necessarily private investments. You get more people, wider ownership of people even getting to save in these instruments, because we know these instruments are good for the local people. So I think that's my take on it. As to how you do it as a country or as a government, it's up to you how you do your business in your country. But as long as you achieve the same result, you can do it by way of law, you can do it by way of persuasion, or by way of convincing or marketing, I don't know, but the bottom line is to get to do it. So I wish all public utility companies, not just limited only to telcos, were giving something back to the local, to the general public by way of increased ownership. That way we have a proper, really economic empowerment and inclusive economic empowerment.
Right, Sele, thanks for that. Paul, we understand that the Ugandan government wants to, raise local ownership into MTN, and it is very right for President Museveni to call for the group to flood the bourses. And we've seen what has happened in Nigeria recently, MTN listed. But let's pitch to MTN on this panel. Why should they list on the Uganda Securities Exchange?
Okay, so just to add to what Celestin, and a lot of what Celestin has just spoken about, some of the reasons why they should come to market. But majorly, public interest companies play a very big role. Whereas if you look at MTN and the value it has added to the country, it has about 23 million subscribers on its network. The revenues it's generating on an annual, I think about 2 trillion. Last I heard, it paid about $250 million in dividends, I think the other year. And the impact it had when it did pay that, we saw the depreciation of the shilling just to raise that amount of money to pay out. Now, the people who are contributing to this company are local investors or local wananchi, whereas they do a lot of initiatives and they also contribute to the economy in terms of taxes, employing agents, employing people. On the side of the company, I think it is goodwill to actually come to market and share in this wealth and they've generated from the locals. And I think companies such as MTN should look at it in good faith, that they are giving back to the public part ownership in what they've contributed to. MTN has been, I think, in the market for the last 20 years. But I would also like to look at it that the policy the government passed is for the telecoms. So I think it's not really targeting MTN, but all telecoms in the industry, I think, that have had more licenses for more than 10 years have been participating. So we should see Airtel and the others, I think, come to market in due course. So for me, I would think the spirit is right. And I do know that they've been speaking to the NSSFs in how they could have done this prior to this policy being put in place. But we as capital markets proponents, we think that it is important that the general public, I mean, if you have 23 million users and then you get into the agents, all these can actually participate because they earn income from these or their well-being from this teleco, but they can go further ahead to save and grow more value for the company.
Thank you, Paul. We've looked at what we are doing and the current status. I won't take closing remarks. I'd rather look at what are you as the proponents in the capital markets as well, the stock exchange CEOs are planning to do to see more relevance, because that's where we started, to see more activity on the bourses, and to even make it much easier for investor inflow from other East African countries, but also regions from around Africa? I'll go with the chairman first.
Okay, well, good one again. I think, what we need to do, what we are planning to do, is to continue the conversation, to continue lobbying as much as we can for and marketing and campaigning for companies to join the capital markets and list on our markets. But we also want to add value ourselves. What are we really giving these people? At the end of the day, someone will come to list their company because of the value they are seeing, not just because they like you or goodwill or they are being forced. No. They will have to come because you have something to offer. So what are we planning to offer? We are planning to offer what we are not offering today. Enough. We've been doing things as they were done maybe 100 years ago, going by the same rules that have been created in London or New York. But we need to address some of the really relevant issues around our own environment. Because there's one thing we know. Someone comes to the market because they want to raise funding, and people go to invest in a company because they want to make the money. But for us as market players, people who are in charge of markets, we want to add the value of getting the confidence between those two people. So now our economies are growing. There's no doubt about it. The region, actually East Africa is the fastest growing region on the continent today as we speak. So our economies are growing. Our companies should be also utilizing our markets. So what we are doing is to try to address some of the concerns they have had. Okay, the issues that go around requirements, which are sometimes stringent for a good reason, because you want to protect investors, but at the same time, you want also to not to do a laissez-faire kind of way. No. We want to relax by way of understanding their businesses themselves and through regulatory framework, through approaching them, and most importantly, a lot of education and delivery of how we deliver our messages, because sometimes people don't even know the market can be good for them. So we want to ease our language at the same time and our rules.
4 minutes for Paul and Moremi on the clock.
Yeah, so what are we doing? In Uganda, a couple of things. One, we're working with advocacy. We're trying to advocate for the capital markets to play a bigger role, especially around government-funded projects. So we're involved in a financing strategy for Uganda, and we're giving our contributions on that front. But we're also actively engaging companies that need funding, and more in the fixed income space of corporate bonds and not necessarily equities, so that we grow them into the capital markets. The second thing we're doing, we're diversifying our product base. By that, we have looked into getting into commodities, and this is an active project that we should start, probably launch August, September this year, because we've been working on the background. The other thing we've done is we've improved, or we're using technology to improve access to our markets, not only for the investor, but also for the issuer that needs the capital. So that is what we are currently looking at to improve the capital markets, and we believe that should add value to the capital markets as a whole.
Thank you, Paul. Moremi?
Okay. The government of Tanzania currently is pursuing socio-economic development to its people via industrialization and the infrastructure that will support that industrialization. So for us as a stock market, what we are doing under that kind of economic framework is to engage with the government, local governments, for example, issues of infrastructure bonds or industrial bonds or municipal bonds that will go into putting the infrastructure both for easy movement of goods and services, but as well as industries where the need to use industrialization to bring about economic development to our people is concerned. I talked about financial literacy and the need for people to be more aware of what we do as the capital market in mobilizing their savings and put them into productive uses in support of the industrialization. So we are engaging again with government agencies and policymakers so that the collective investment schemes and pooling of assets or savings together so that we can invest in a significant way in infrastructure projects and enterprises projects and other economic and social development projects is relevant. We are also engaging with the government for more fiscal incentives for local governments or subnationals or private enterprises that are willing to come into the market and compromise with the need for more governance and more transparency and more disclosure. The public, through revenue authorities or policy within the Ministry of Finance, to give them some more fiscal incentives and the other incentives for them to be motivated to come into the market and use the capital market for raising funds that will go into productive activities within the economy.
Thank you so much, Moremi, for, of course, the insights that you just gave us. Thank you, Célestin. It was very interesting. And Paul as well, for breaking down, of course, how the market outlook is according to the performances and the IPOs that we've seen in the past 1 to 2 years. You mentioned about 5 years now, looking at about 10 plus IPOs in Tanzania. Allow us to leave it right here. For today's edition of the CNBC Africa Special Report, we were sitting down with East Africa's CEOs at the market level, securities and stocks. And on my immediate right is Moremi Marwa, the Chief Executive Officer of the Salaam Stock Exchange. And of course, just next to him, we have Célestin Rwanbukumba. He is the Chief Executive Officer of the Rwanda Stock Exchange, and the far right, Paul Bwiso of the Uganda Securities Exchange. Bringing us to the end of this edition. Remember, you can follow more of the conversations on Twitter at CNBC Africa, my personal handle, Michael Mugisha. From the East, it is bye for now.